What's up, everybody? Welcome to the Stocks channel. My name is Cory, and in tonight's episode, we're doing another stock market technical analysis update. But before we get into the charts, you know what you gotta do. Go ahead and smash that like button and subscribe to the channel to follow along with all of my updates. Now, first up, we have the ticker symbol SPY, which is the SP500 ETF. So let's go ahead and crack open this chart and see what's going on in the stock market today. All right, so on the SPY ETF, we see another day of selling with the SPY ETF closing down negative 0.88%. Now remember, we're still expecting that ABC correction, and today is going right on plan with that C wave starting to make its way down. So remember, on the way down, we are going to find considerable support, and today you can see we found support right at the 50 EMA in the previous low from the bounce on September 8th. Now, if you notice, today's price action did close below the 5 EMA, and that 5 EMA is starting to make another breakaway from the 13, showing us that this bearish trend is starting to pick momentum back up. So whether today was the bounce before we start heading back up or we're going to continue down is to be determined, but I still have to give favor to closing these gaps at $330 and $327. So if we jump over here to a 1 hour chart, we did come close to having a double top, but we did find support at the neckline. If we did see the price action close below the neckline, we would have known that we were going to see a further decline. But now that we've bounced off support, we need to see if we're going to form a lower high before ultimately heading lower. So what that will look like on the hourly chart is we would see a bounce, come up here and form a lower high, and then ultimately come down and get ready to close those gaps below. So remember, in a bear market, we don't want to see higher highs, or that's a sign that we're seeing that reversal. And with yesterday's price action, we did see a double top instead of a higher high. So the bearish trend and the bearish price action is still 100% in play. And as long as we have a bearish trend, I would be patient and be ready to buy at those support levels. There's no rush to enter into a position during a correction. Know your support levels and build a position as you accumulate to the downside. And remember, we're still in a long-term bullish trend. So if we zoom out here, it is without a doubt that this long-term trend is still bullish. We could come all the way down to SPY levels of 300 and still have a great long-term trend. So be aware of the big picture and be aware of these support levels and be ready to start scaling into position sizes as the market continues to fall. So right now, we still see the market bouncing off the 50 EMA, and we still do have these price levels below that we expect to see met very soon. So remember, the targets of 330 and 327 would close our short-term price gaps, and I would not be surprised to see a significant bounce off of those levels when we finally get there. Now, that doesn't mean we're out of the water yet. We still have to watch that bearish trend, and we still have to watch the price action for a reversal into a bullish trend. And before we ultimately get bullish on this market, we want to see a trend shift. So right now, we're still short-term bearish, and the price action and the trend are still telling us that there's more downside coming. Now, one thing on the C wave down is we could see chop again, where we could do these bouncing before going lower and then bouncing before going lower. And that's really just a strategy for that smart money to confuse the retail investors and try to shake them out of their positions. So remember the big picture and remember our support levels, and most of all, just be patient. Just consider September a correction month. And if you're really not sure what to do, sometimes it's better to do absolutely nothing and wait till the end of September, and let's wait to see if we're going to see a trend shift before ultimately going long on this market. And remember, if we do break down below 327, we're looking for a drop all the way back down to about $305. So there's considerable downside below support, and we have to be aware of our support levels, and we have to acknowledge that there is support levels much lower if we do break below this $327 level. So next up, let's take a look at the Nasdaq 100, and we're looking at the QQQ ETF, or the triple Qs. And we see a very similar story on the Nasdaq 100. However, we do see more trouble with tech because tech did close below its 50 EMA today. That is a very bearish sign because the price action is now closing below the 50. And if we zoom out on this bullish trend, we see that we were trading above the 50 EMA going all the way back to April of this year. So that is definitely a sign that this bear market is getting worse for tech. And I would not be a buyer of tech right now until we see a considerable bounce off of a significant support level. I would expect there to be a lot of bull traps and a lot of bear traps during this next leg down. And that's why you have to remember to follow the trend and follow the price action. The price action is telling us bearish and the trend is telling us bearish. So therefore we are bearish. Now we are getting close to the bottom of the Bollinger Band, and the Bollinger Band is starting to flatten out, but we're starting to see that 20 simple moving average start to roll over and looks like it's ready to start heading to the negative direction. So overall, the bearish trend is starting to strengthen, and that bullish trend went from bullish to neutral, and now that trend is starting to change from neutral to bearish. So that short-term bearish trend is starting to pick up traction, and it's starting to turn into a more significant medium-term bear market, especially on the tech sector. So remember, for this trend to reverse, we need to see the price action come back up and close above the 20 simple moving average, and we need to see that 5 EMA cross back above the 13 EMA. So right now, ultimately, we're very bearish on the tech sector, and look out below. Our support levels are down here at 265, 255, and then we have this next level down here at $250. Next up is the Dow Jones Industrial, and we're looking at the DIA ETF. And the Dow Jones is still looking the strongest of all, only closing down negative 0.5% today. Now the Dow Jones is still in a bearish trend, and we still have the price action closing below the moving averages, but we are still trading above the 50 EMA, and we have yet to even test the 50 EMA as support. So even though the Dow Jones is in a short-term bearish trend, it is showing us evidence that it is the strongest indice of the three right now. And if I were to rank the indices by strength, I would have to say the strongest being the Dow Jones, the second strongest being the SP 500, and by far the weakest right now is the Nasdaq 100. So it does look like there's a rotation out of tech and moving into those industrials. And we do see industrials looking the strongest of all. And we see that in the evidence of the price action and the bearish trend being slightly weaker on the Dow Jones Industrial. Now that doesn't mean the bearish trend won't get to the Dow, and I would still expect to see the Dow go through that ABC correction and at least test the 50 EMA. If the Dow is going to be the strongest of them all, it could find support there and start bouncing because that 50 EMA is going to start heading back up. But if we do close below that 50 EMA, watch out for the gaps at $268 and $264 to be filled. Next up is the VIX, which is our fear indicator, and we did see the VIX spike this morning, going all the way up into the high 20s before ultimately coming down and closing at 26.5, right above that 20 simple moving average. So remember, the VIX was in a bullish trend, and it's now at an inflection point where it's very close to its 20 simple moving average, and we're waiting to see if the VIX is going to have a strong bounce to the upside, or if it's going to start rolling over and slowly bleeding out as fear leaves the market. But right now, it does not look like fear is leaving the market, and I still would expect to see a spike in that VIX and a spike in volatility. And remember, if the VIX can get back into the 30s, we're going to see volatility enter this market again, and we're going to start seeing volatile days that swing minus 5% yet again. So we're not out of the water yet, and we're still fully in this correction. And we have to be patient to see how low this market's going to go before it ultimately finds support. And we need that trend to shift back to bullish before we go long on this market again. So let's take a quick look at some of the sectors driving the market. And first up is financials. And we see financials closing down minus 1% today, continuing its short-term bearish trend. We still see the price action closing above the 50 EMA, but ultimately closing below the 5 EMA today, so we still have that bearish price action and that bearish trend. Now remember, if the financials do close with a lower low, that means they are officially in a bear market, and the rest of the stock market is not going anywhere while the financials are in a bear market. So watch the financials and watch for that lower low. Next up is industrials, and like we already saw with the Dow Jones, the industrials are doing well today, closing up 0.2% when the rest of the market is pretty much red. So that shows the strength of the industrials, and we knew the industrials were the strongest because we knew the industrials were in a bullish trend. So that 5 EMA is above the 13, the price action's closing above the 5 EMA, so the trend and the price action are telling us bullish, and of course that is verified with today's close yet again over the 5 EMA, finding support at the 20 simple moving average on the low of the day. So without a doubt, there's money flowing into the industrials, and that is a very good thing to know, because if you're looking where to put your money, you want to follow the trend because the trend is your friend. Next up is the healthcare sector, and we see healthcare still in a short-term bearish trend, and we did close above the 50 EMA today, but we're still below that 5 EMA, and that 5 EMA is still below the 13 EMA. So the healthcare sector is still in a full correction, and we're still waiting for that ABC correction to play out before we go long on the market. Next up is the US dollar, and we're looking at DXY. And DXY is still playing games with us, trading right around that inflection area of the 20 simple moving average. That 5 EMA is getting ready to cross below the 13 EMA, but it has not done so yet. So we still have to give benefit of the doubt to the dollar being in a bullish trend, albeit that bullish trend is starting to weaken and the price action is getting very close to closing below that 20 simple moving average. So right now the US dollar is definitely at an inflection point, and we could see a bounce to the upside or a close to the downside any day now, because it's really just building up energy and it's consolidating in this range. So it's too soon to say what the dollar is going to do, but if I had to give it any benefit of the doubt, I'd have to say to the bullish side, because that 5 EMA is still above that 13 EMA and we're still trading around the 20 simple moving average. Next up is gold, and we see gold still trading within a tight channel. And remember, on gold, we want to have our stop loss if gold closes below the 1920s area, because look out below and gold is going much lower. So right now gold is a hold, and I wouldn't sell it until we break below that support level. In any event that the dollar does start to weaken again, I would expect to see gold break right through these resistance levels and enter into a very strong bull market. So ultimately, gold is still trading right around an inflection point, right on that 20 simple moving average, and we still have that 5 EMA trading above the 13 EMA. So gold and the US dollar are really just waiting to see which direction they want to go. And we're just going to watch the price action and watch the trends before we ultimately decide where we want to make our trade. Next up is Apple, and as we know, Apple is absolutely a market moving stock, and we see Apple continuing to show that bearish trend with the price action closing below that 50 EMA today. So I'm still fully expecting Apple to finish out this ABC wave and close these gaps below, which brings Apple all the way down to $96. So today's price action was very bearish. Closing below that 50 EMA is not what you want to see if you're a bull. And we still see that 5 EMA accelerating to the downside, as well as that 13 EMA accelerating to the downside. We also see the 20 simple moving average rolling over and turning negative, and that is not what you want to see if you are a bull of Apple. So right now the bears are winning, and the bears are trying to come down and close these gaps. Next up is Tesla, and Tesla closed down about -4% today. And it almost looked like it was going to have an island reversal pattern, but that gap was closed intraday, so we can't necessarily call it a reversal pattern. But it still does look like Tesla is also in an ABC correction, even though that B wave had a very nice FOMO bounce. I still wouldn't be surprised to see Tesla come down and finish this C wave down much lower due to all of the FOMO and dumb money that is in this stock. But right now, we still see Tesla holding up above the 20 simple moving average. So it wouldn't be surprising if that 20 simple moving average holds up to see Tesla continue to the upside. However, if that 20 simple moving averages break down, that would show us that we're going to continue that bear trend that Tesla was starting back in the beginning of the month. Next up, a quick update on Bitcoin, as we still see Bitcoin continuing its bull market and continuing that powerful upward trend. And now we see the price action closing above the 50 EMA, as well as that 5 EMA getting more power, getting ready to cross back above the 50. So Bitcoin looks like it's ready to resume its bull market, and I would look for a break of 12K to show that we're going to get to a new high for the year. So remember, on the SP 500, watch out for these gaps below at 330 and 327. And in any event that those support levels break down, watch out below, because we're probably going back down to $305. So please remember to smash that like button on this video to help me out. I really hope these videos are helping you out. And don't forget to subscribe to my channel so you can follow along with all of my updates. Thanks for watching, everybody. And as always, I will see you in the next episode.